inspiring leaders, Lihle Mosiane back with you for another crucial session in our SGAL training series. Now, we've talked about what it means to lead, how our structures operate, and even how to manage your brand. Now, today we're diving into the nitty-gritty but incredibly important world of financial matters. This is where you ensure that your brilliant ideas can actually come to life responsibly and accountably. It's all about equipping you with the know-how to manage funds effectively for your structure's success. Let's start with funding. Where does the money for your initiatives come from? Firstly, it's super important to know that your structural funding is determined by the regulation for the allocation of funds. This university regulation specifically guides decision-making regarding the financial resources allocated to each student structure within our various leadership programs. It ensures fairness and strategic distribution of funds across campus. The financial system is then the actual system through which student leaders access these allocated funds and manage transactions. So this means when you're looking to spend money, you're operating within the university's established financial framework. Now, the crucial thing to understand here is the regulation of payments, because this isn't just free-flowing cash. Every payment is regulated by strict university policies and the executive committee guidelines to ensure transparency, accountability, and of course, the proper use of these funds. Before we dive into payments, let's quickly clarify something foundational. Cost centers. When you look at your budget or make a payment request, you'll often see a reference to either an A cost center or an X cost center. Now, an A cost center refers to the cost center for which your allocated institutional funds will be deposited. These cost centers are drained of their funds prior to new allocations being made. As such, we encourage leaders to make use of these funds prior to the draining date. An X cost center is sort of like your structural piggy bank. It's linked to your structure, but it never gets drained. All money coming into your structure should go into your X cost center. Best practice dictates that you spend funds in your X cost center once your A cost center has been depleted. Understanding which cost center your funds are assigned to is vital, because it dictates how those funds can be spent and how they need to be accounted for. The Executive Committee guidelines provide detailed definitions and rules for how each type of cost center applies to your specific structure, so make sure to check those out. Now, this is where it gets specific. Managing your structure's finances involves key payments and procurement processes, but these differ depending on which type of student structure that you belong to. You need to know which system your structure uses inside out for effective planning and execution. If you're part of a day house, faculty house, sub-house, or society, your structure makes use of the UP Club Funds system for payments and transactions. For you, the primary method of payment and transacting is exclusively through expense reports, or ERs. Now, an expense report is essentially a directed EFT payment to a specific supplier. So this means when you submit an ER, you're instructing the university to pay a vendor directly for goods or services you've acquired. Crucially, these expense reports can also be used to process claims by EC members who were authorized to spend their personal funds on behalf of the structure. It requires meticulous documentation. Think receipts, invoices, and clear justifications. This is your go-to for all payments within the Club Fund system. The expense reports rules and guidelines are prescribed by the DSA, Department of Finance, and UP Club Funds. So always make sure you're following those specific instructions. Now, on the other hand, if you're part of a legislative committee, key committee, special committee, or the SRC, Your structure makes use of the university's procurement system. For these structures, you will exclusively make use of the purchase order or PO system. A purchase order or PO is a formal document generated before a service is rendered by a UP vendor. Now, a purchase order is a formal contractual commitment that the university will honor a payment to a vendor for services rendered after these services have been delivered. You will request purchase orders as prescribed in the Executive Committee guidelines. This system ensures funds are committed and tracked appropriately, giving you control over service delivery before the money leaves the bank. For those of you using the procurement system, which includes the legislative committees, key committees, special committees, and the SRC, you also need to be aware of procurement limitations. You can't just buy anything from anyone. There are specific procurement rules. For example, depending on the quotation amount, you'll be required to get a certain number of quotes from different vendors. Now, these specific thresholds and requirements are clearly detailed in the Executive Committee guidelines. It's your responsibility to check and adhere to these limitations to ensure fairness and good financial governance. Don't assume. Always confirm the code requirements based on the value of your intended purchase. Now, regardless of your system, sometimes for specific operational needs, you might receive a cash advance or an upfront amount of money for pre-approved expenses. However, receiving an advance comes with a massive responsibility for reconciliation. This means you must account for every single rand spent from that advance. You'll need to submit all receipts, provide detailed breakdowns of expenditure, and return any unused funds promptly. The method for reconciliation will align with your structure's primary system, for example via the expense report or club fund structures, or a specific reconciliation process for procurement system structures. Proper settlement is non-negotiable and essential for accountability. Now, two overarching principles tie all of this together, no matter your system: pre-authorisation and reconciliation. Pre-authorisation is exactly what it sounds like. All expenditure, every single payment must be approved before it happens. This means you must get formal permission to use your personal funds for structural business from the relevant authorities. Now, this prevents unauthorized spending and ensures funds are used according to your approved budget mandate. Reconciliation is the final step in the claims process. It's the process of matching your actual spending against your approved budget and ensuring that all transactions are accurately recorded and accounted for. It's like doing a financial health check at the end of an event or reporting period, making sure everything balances out and identifying any discrepancies. This process is crucial for learning, improving future budgets, and of course, maintaining financial integrity. As student leaders, mastering these financial matters is non-negotiable. It's not just about managing money, it's about building trust, demonstrating accountability, and ensuring that your initiatives can thrive. Strong financial habits enable you to plan better, execute more effectively, and ultimately achieve more for the students that you present. Always remember to consult the Executive Committee guidelines for the precise details and requirements for your specific financial processes and system, because these are your essential resources. You're doing amazing work in building your leadership capacity.